So I worked 5 years on the Paris market, French market, and then I joined the London team for this French bank. Coming back to France, I've now joined Berlin. Worked for 1 year, and we are present mainly in Germany, Berlin, with a book, a global book of about 18 billion loans, mortgage loans. In France, it's about a tenth of this portfolio. Today, we have a very strong growth profile for France because we think we are today a little bit below what we should be doing in a French market, which is a deep and stable market as was presented. So the main areas where we work is obviously Paris. We also look at regions for very core assets, central assets, meaning Lille, Marseille, Lyon. And we would like to also start looking at maybe some other areas like Bordeaux, which we think is also a good place to look at. In terms of assets, we look at office, retail, and logistics. This is the core of our business in France, and we also can look at hotels. We will surely discuss the topic, but we have seen lately a lot of projects, a lot of requests from investors in the hotel area. Yeah.
Great. Oliver.
Thanks. Yeah, good morning. Oliver Kummerfeldt. I work for Schroders, or to be more precise, Schroders Real Estate, which is the real estate investment arm of Schroders. We are a global investor in real estate in Asia and the US. That's mostly indirect through a REIT business. And in Europe, that's both. That is direct investment in our own funds. We manage separate mandates. I think it's about 14 billion euros assets under management at the moment. In terms of continental Europe, obviously a big share in Germany, in France and the Nordics, a bit in Spain. In France, it's, well, as you could imagine, probably it's heavily geared towards Paris, but we did invest in the regions in retail, and we've been looking at offices. And my background is I've worked for significant time for a big brokerage company doing research focusing on the European region, and it's now about 3 years that I'm with Schroders, and here again I'm the dedicated analyst for our investment in continental Europe. So I try to help define our investment strategy for the different mandates, for the different vehicles, and then support the asset managers, the transaction managers in decision making and making sure the investments deliver the returns that we promise investors.
Great, thank you. Arnaud.
Hi everybody, I'm Arnaud Violette. I work for Colliers in France for 2 years now, and I've been in the French Paris market for almost 20 years. I started really young. I've done some jobs in research and consultancy, marketing and brokerage. And in Colliers in France, as Blair said, we are focused on occupiers market and investors, landlords, brokerage, tenant rep, design and build, meaning that we know how the corporates are going to use their office and the impact on the office, the way you deliver it, the way you think about it, and which can be the best localization for the office, and all the corporates are going to use it. We should discuss that a little bit later on, but the user experience for the corporates and their staff is key right now in the business, and the new ways of working are really impacting the office product in Paris and in France. We have other offices in France, in Marseille, Lyon, Lille, Bordeaux, Toulouse, and Nancy. So we have a view also on the other market than Paris, but definitely France is a centralized market.
Okay, good. Thierry.
Hello, so I am Thierry Granier. I am a tax partner with CMS Francis Lefebvre Avocat. Francis Lefebvre, avocat, is a French firm which has 400 lawyers. Regarding the real estate aspects, we have a special team which is specialized for both legal and tax aspects. At the beginning of this year, Pierre Popesco, who is in the audience room, joined us. He was previously with Herbert Smith Freers, and he was joined with Benjamin Biel. So now in the Paris office, we have a team of 80 people who could help for the real estate aspects. In the UK, last year, Nabarro merged with CMS UK, and now this is a leading team for the real estate aspect in the UK also. And globally, in the world, CMS has a team of 800 people for the real estate. In France, Francis Lefebvre Avocat is also a law firm, but which is specialized with tax matters. And if you want to invest in France, you have to take into account the tax aspects, even if it's better for the stability and for the visibility since Macron has been elected. And I'm very proud to be one of these tax partners.
Okay, good. I'm sure we'll come on to the tax part later. Steve.
So my name's Steve Cowen, so I'm responsible for transactions for Grosvenor in continental Europe, which for us really is 3 cities, Madrid, Stockholm and Paris. So I've been based in Paris for 28 years. Grosvenor has been active in Paris for 22 years. And during that time, we've carried out about 1.7 billion euros of mainly core investment in retail and offices. The last few years, we've been selling a lot of those assets to the extent that we've actually sold everything we have in France now. And we're moving from a core strategy to a much more core plus value add, even development in the office sector.
Okay, good. And we'll come to that later, because I think there's some very interesting things about that change of strategy, what that indicates, and how that plays into other parts. I just wanted to pick up one thing that was in Blair's presentation there, which is about the Macron effect, Macromania. Just in terms of, maybe just starting with you, Oliver, in terms of France and the perception of France, do you think that's significantly changed since Macron in terms of looking at the comparatives within Europe, in terms of how you're seeing it from a European point of view?
Yeah, and I was quite happy to follow Blair's presentation. I think he got a lot of things really spot on there. Yeah, I mean, if you look at maybe Europe 3 or 4 years ago, before we had Brexit, I'm sure it was the UK and Germany that were on the forefront in terms of investors' perception of risk, for example, from a political perspective. And I think with Brexit that has shifted now, and Macron has come in. So I think now it's on the continent, it's definitely Germany and France. So yeah, I think the perception of France as an investment location has changed. I think the government has made a lot of initiatives in terms of making the life for foreigners coming to France and Paris easier. So yeah, I think there has been a change in perception.
And from your point of view, Steve, you're obviously again looking not just at France but at the European mandate for Grosvenor. How are you seeing that? You've obviously chosen a city strategy specifically. So how do you see Paris within that in comparison to the other markets where you are active?
Well, Paris has, I think, a special place in France. In particular, some of the numbers that Blair showed, effectively 30% of GDP. If you look at it as a separate, we look at cities as separate economies, and effectively the Paris economy is much stronger than France. So you have much lower unemployment. If you look at the office market, it is 60% of the French office market is Paris. it's a very dense urban environment. There are a lot of things which tie in with what we're trying to do, which make Paris very interesting for us.
Okay, good. And just in terms of the reforms, maybe for you actually, Thierry, the reforms that Macron is trying to put through, previous governments have tried to do the same, or at least very similar, but they've never actually succeeded. Do you think that Macron, because of the sort of kind of wave of popular enthusiasm that brought him to power, actually stands more chance, and do you think the French public will go, okay, that's fine, or will we go back to sort of spirit of '68 and everybody will be, you know, dancing naked in the street and burning Volkswagens?
Sounds great.
No, we feel that the French population is beyond Macron, even if we have strike, and we have currently strikes with train and with airplanes, but it seems, yeah, and yesterday we were on strike in Paris, well, in France, and it seems that now, well, we try to adapt, and even if we have strikes, well, the population is behind our government. So, he has the momentum, and I think that the reform could be done now. And regarding, well, the real estate, as it was, as is by explained, some reforms were implemented or were voted with Hollande, but he could not have the, how could I say, well, the population was not with Hollande, as you could see. But now, regarding the real estate, well, we could see that some new laws are voted, and it's better. So I think, yes, it could be very good for the investment in France.
Okay, good. Yeah.
And look, I mean, we still have the pension reform ahead of us. I mean, the SNCF reform is probably giving us sort of a bit of an idea of what's going to happen. The pension reform, I think, will be the one in 2019, which will be very big in the media. Because nobody likes it if his pension gets slashed or if you have to work longer and so on. But I think that shouldn't necessarily sort of deter us from looking at the fundamentals and the momentum that is there in the economy and the optimism. You'll see TV images of people protesting in the street, you know. But I think, and it's nice to hear actually from you, who's a lot closer from what I read, that a lot of the French population is behind these reforms, saying, you know, why do people working for the railway have sort of these extra privileges, whereas we have to go on from one temporary employment to another? That's just not fair. And I think they see that Macron delivers, and he has sort of a parliamentary majority for that. So you'll see the pictures, but that shouldn't sort of get us a negative image or sort of make us think that conditions are deteriorating again.
Okay, and Serge, just in terms of your perception of it, do you see Macron as necessarily friendly, the reforms friendly to the real estate sector here, or do you think this is more about changes to France which make it more generally investor friendly and therefore real estate benefits from that side?
Yeah, I think maybe one point is if we look back 1 year ago at the elections, I think there was really a relief of having Macron instead of a far-right wing leading the country. So I think part of his success and the fact that investors come to France is that France is really seen as a safe haven for investors today. And if we look at what is happening around France in Europe, with Italy, Germany having a less stable government, I think it's interesting to see that for investors, I guess France is really seen as a country where we can invest and where there is stability for the years to come. With regards to the reforms, I guess there will be a protest, and that's the way France works. But I think there is also people are waiting for Macron to do the things he has been elected for. So I guess he has a good chance to push his reforms through, and we hope he will do so. Yeah, I think the most positive impact is having investors come in all sectors, and also specifically in the real estate market is part of the investments that investors look at specifically. So yeah, there is a positive trend, I think, today.
Okay, good. Yeah.
I mean, just because you mentioned Germany, because I take a pan-European look, and yeah, maybe I'm a bit biased here, but I don't think we have a political problem in terms of in Germany as as a safe haven market. There will always be reliable politics. What I give you though is the fact that a lot of the German markets, in terms of how the German economy has developed, are comparably far into the cycle. And if you look at where France is, and for example, the Paris market, not necessarily on the capital market cycle, because that has affected most of the markets in a similar way. I think the occupier market is more in a mid-cycle, and that is something for investors to benefit from. So, while Germany is a stable environment, it has seen a lot of investment, yields have seen compression, the occupier market has moved far along, there is more to come, but I think Paris is, or the French market is a little bit further back, and that is what is exciting for investors at this stage. Okay,
good. I've just had a question in from Alex, thank you for that, which maybe I'll address to you, Thierry, just in terms of which is quite specific about the tax treaty between France and Luxembourg. Without running up a massive bill, because you give me a whole 2 hours on it. What's your sense of that? Is it something that investors need to be more aware of, and what are the implications for it?
Well, the implication, first of all, it was a surprise, even if we knew that this tax treaty was renegotiated between Luxembourg and France. But what we didn't know is when this renegotiation will effectively take place, and it took place in March. But it was like a thunderclap, because a big surprise for the market. Just to be very short, but when foreign investors wanted to make investment in France, and if they structure properly this investment with a specific vehicle in France and in Luxembourg, you only had 5% withholding tax when the French vehicle distributed dividends to the Luxembourg vehicle. With the new tax treaty, this withholding tax will be either 30% or 15%. So according to us, it's just a way to adapt the market, because maybe one could say that it was abnormal to have this favorable tax regime between France and Luxembourg, and we know that Macron disagrees with this favorable tax regime. But as it was explained by Blair, when foreign investors want to acquire a property in France, the tax is just a figure in a model, and you will adapt the price. So at the end of the day, I'm not sure that it will limit the investments in France. It's just that you will adapt the price that you could offer to the seller. So you will just have an adaptation in the price, and that's all. So at the end of the day, okay, we need to take into consideration these new figures, this new information. For sure, it will have an impact for the current investment, because in the current models, the investors took into account the fact that the withholding tax was only 5%. But so they have to adapt in the models that it will be certainly 30% or 50%.
Okay, good. I'm going to come through to some of the kind of overarching trends. There's actually there's a poll going on here at the moment. So you can log in and choose which one of those you want to vote for out of those. Those are the questions here, but there should be some polls appearing on there, which will be about what will have the most positive effect and various things. So you can vote on those, and then I'll flash those up for everybody. Just what was quite interesting about, I think, what Blair was saying, and I want to pick this up with you, Steve, is that actually a lot of the market fundamentals are in place in terms of positive economic growth. Is that something that's led to your strategy, which has been a move away from sort of regional France and retail, and more into that development sphere? Maybe just talk us through what the thought process was behind that, and what that means in terms of the sort of opportunities that you're looking at, which has moved maybe more towards the value add side.
Yeah, effectively we've made quite a big change to our strategy. A long time we've been doing core investment. I think we just got to the stage where the core sector is very expensive, and yields are going to move out to a certain extent. Obviously, different opinions by how quickly and how much, but they will move out, and so there will be pressure on returns for core investment. So we just decided that it was time to sell down quite a lot of that type of investment and move into what we consider to be a big opportunity at the moment in Paris. We're still doing a lot of retail investment in other cities, but in Paris, we see the opportunity being you've got a very large, the largest office market in Europe, but you've only got something like 14% of the space can be considered as grade A today. You've got a difference between rents for new and average rents of about 50%. And so there's a real opportunity, we believe, to buy secondary office buildings and invest in those assets and reposition them. So I think that we've effectively taken an opportunity to sell at a time we considered it was good to sell, and to move forward into a new strategy.
Okay, good. Yes, Oliver.
Yeah, that sounds very similar. I've heard that before, and I think it makes sense because I think it's right to capture that positive occupier market momentum now, where if you look at because we do a lot of analysis on sub-market level, and if you actually look at Paris, the city of Paris, the 20 arrondissements, the vacancy is in some sub-markets below 3%. There's nothing, and there are sub-markets which you still have sort of your 14% vacancy, but I think it's an idea that we've been sort of running with for a while as well, trying to capture this positive occupier market momentum in terms of providing high quality space, which is extremely scarce, and being able to sort of work with the rental uplift. I know a lot of people still go, yeah, there's still a lot of incentives in place, and to be honest, sometimes I think they're not going to fall massively. It's just sort of a part of the market practice now. But capturing this positive occupier market momentum, providing quality space, especially in areas where you have the transport connection, where the Grand Paris will make a big effort, a big impact, and providing that space is something that we've been trying to do as well. There's more competition for these assets in the market as well. If you look at pricing, and I know we've seen Blair's chart. Prime yields sort of like 3.5%. Some people say 3%. And in some sub-markets, you go to 4%. But I think if you look a little bit further up the risk curve, you can find assets, 5% plus, and then really, put some capex in and manage them up.
Good. Yes, go ahead. Yeah.
Yeah, it's true. Also on the debt side, we have seen more and more investors come with requests for value-add projects, and the positive thing is that on the bank side, there are actors who are ready to finance those projects with low margin. Of course, there is a premium with core, but I think you can still have a very good pricing for debt on this type of assets today, and that makes it maybe even more interesting for investors to look at these projects.
And Arnaud, I just wanted to come to you. Steve obviously electing to move away from the regions in terms of retail because the strategy has changed. Is your sense that regional retail is less of an opportunity, or are there investors particularly looking at that area? I mean, Oliver already said that Schroders have some regional shopping centres. What's your sense of that, and what's your sense of the retail sector in general in France?
I would say that Grosvenor has done the right move because of its portfolio, but you found buyers. So there's a market for retails in France. Depending on your portfolio, your strategy, either you are a seller because the cycle when you bought the assets, then you can exit now. But definitely you have to pick the right assets. And like in other countries in Europe, retail market is impacted by the economy. But there's still a market for retail in France, and there's still some buyers. The idea also is how you can refurbish old shopping centers into new experience for customers. And France has been a big history in shopping centers, so there's a lot of assets that you can refurbish and put back into the market with the right retailers and the good offers for customers.
And one of the things that was in Blair's presentation as well was the kind of chart there about the sectors showing quite a big growth in terms of logistics, 2016 versus 2017. What's driving that growth? Is that largely e-commerce? What's your sense of that? And if anybody else wants to pick that up in terms of the logistics, it's been obviously a winning story across Europe, but what's your sense of how that will perform in France?
I would say that the growth rate is here, so the consumption also is in France pretty steady, and then with the development of the e-commerce, you need to have a pretty efficient logistic platform. I mean, France is not the center of Europe, but sometimes we like to say so. And when you look at from Lille to Paris, Lyon, and maybe Marseille, we have a strong history in a logistic platform. Now, with the e-commerce, we are putting a lot of automatizations within this platform, meaning that as the old platform are getting older, you need to be more competitive with the automation. And Amazon, for example, has chosen the south of the Greater Paris to install a platform of 100,000 square meters, and they are doing that. I think it's like 5 meter or 6 meter high platforms because it's with these automatizations. So the product itself it's changing. So it comes to good opportunities for investors to look at old product, and as usual, localization will be key. But the consumption in France is pretty good. So the impact on the logistic, retail and e-commerce and logistic markets is pretty obvious.
Okay, good. I'm getting a lot of questions coming on Slido, which is great. I need you to vote on some because I'll never get through all of them in the time. So you can vote on them and let me know. But I will try and address pretty much everything that there is. I'm filtering through them at the moment. One question that's come in here, which I think was interesting because you could see the difference in terms of rental in Paris versus other parts of Europe in Blair's slides there. What's the potential, do we think, for increases in rent? Looking across the sectors, what's your perception for that? Is in terms of values, is that going to be justified by increased rental potential?
We've witnessed, light increase in rents. In fact, it's step by step. We came from 615 euros per square meter per year, like let's say 4 years ago, to 800 now for prime rate in Paris, with, as we said, economic rents and headline rents. The difference was close to 20% on the worst stage of the market. Now, in inner Paris, it's more like 10%, sometimes 5% if you are looking for office space under 1,000 square meters. So, as you've seen our GDPs, we won't have a big increase in the rents. There's some room maybe for some more increased, but it won't be something skyrocketing in 6 or 12 months' time.
Okay, yeah, go ahead.
Yeah, I mean, I do think there is a potential for growth in prime rents, and I agree with you. It's probably more at a moderate level. We're not going to see a big spike. What is encouraging, though, to see is that the average rents in most markets are trending up, and that shows you that sort of for say not the top 5% for the prime part, but for the top 30% of the market, there is rising rents, and as I said, if you have vacancy rates of around 3% in central Paris, and there is no space, and the other thing, for example, when we talk about logistics rents, I mean they have been pretty flat. And I think that's a little bit of a function of the fact that yield have seen so much compression that most developers didn't have even a necessity to rise rents. I'm not sure how much we'll see logistic rents going up. They might actually stay pretty flat. What I think, though, is that there are occupiers, and increasingly occupiers are prepared to pay a premium for the space you described. Modern space, that is at key transport infrastructure junctions, and that can accommodate more automation, that can incorporate more use of technology, and I think that's what occupiers are after. And for that kind of space, which is very efficient to the operation, I think they're willing to pay a certain premium. Yeah, retail rents. Well, you mentioned we are invested in retail in France. It's not a lot, and I think if you look across Europe, a lot of managers are very wary of the retail market because of e-commerce. I think we're going to see retail sales rising, but the benefits will mostly be felt in e-commerce. We have mostly been looking at grocery-anchored retail, but again, also for that, I think the rental growth prospects, despite the fact that the economy is coming up and we see retail sales going up, is still pretty flat. So I think modern office space and sort of mid-market product about 30% in terms of quality. I think that's where we see probably the most growth. I mean, there are some fantastic submarkets in Paris, which I think will really see a lot of improvement structurally and in terms of where supply sits at the moment. And I think that's identifying these kind of submarkets will be very beneficial. And
just quickly, Arnaud, on finishing this point on rents in a way, I had a question come in, thank you for that as well, which is on the high street retail rents. So high street rents haven't really changed over the last kind of 18 months, have remained flat. Is there anything to suggest any movement there?
I'm not an expert on retail, but we don't see a boom in retail rents because the retailers has to manage their sales, and no matter what, we won't see. There's a tough competition on high retail streets for all the retailers. The prices of goods, no matter what, are not increasing, so I don't see them being able to pay more rents than what they are doing. And we have high prime retail rents in Paris, so I don't see a room for a lot of increase in those rents.
Okay, good. It would be rude, Serge, having you here and not talking about finance. So what's the situation at the moment in terms of financing? You mentioned that you were beginning to look at areas like hotels, which maybe previously you hadn't financed. In most cases, can most things get financed? So, for example, if Steve is looking to have his developments financed, what's the situation at the moment in France?
Yeah, I think the message is very positive on the financing side. I think all projects, most of the projects can be financed from core to value add to development. I don't see any constraints. Then it's a matter of pricing, etc. But clearly today there is we have seen a shift in the requests on more value add and development projects. This surely has to do with the environment. I mean, the Grand Paris has an effect on that. And the positive aspect is that there is plenty of debt available, and I think it's a good moment in terms of momentum to invest in those markets. I think the premium is. When we look at core, we easily find prices below 100 bips. If we go up the risk curve, obviously it goes up, but we can still see value-add projects with pretty high vacancy, up to 50%, financed below 200 bips. So I think it remains interesting for investors today.
Okay, good. I wanted to pick up with you, Steve, as well, if I can, a question that's come in on the residential sector. So obviously here in the UK, quite a lot of residential development, PRS, developed a lot in recent kind of years. What's the situation in France? How practical is it for institutional capital, let's say, to be looking at residential? What are the challenges there? Is it something that you're looking to do in terms of the transformation of the offices that you're talking about?
Yeah, we would like to be able to transform office buildings into residential. That's something that we're doing a lot in Madrid right now. I think the issue in Paris really is the constraints that are there, particularly in terms of social housing constraints. Makes it difficult for developers to create residential. But I think there are two opportunities today. One is obviously Grand Paris, which is interesting, the big French developers, because there is enormous potential volumes to be built there. And then within central Paris, there are, you asked a question later about what were the actual specific reforms. There is one going through now, which is not law yet, not voted. But the government is trying to make it easier to transform offices into residential by allowing you to create extra residential space, and also making it easier, or making it more difficult for private people to object against planning permissions, which has always been an issue in France. So I think it's certainly becoming easier from a development perspective. I think on the investment side, I think residential is a very interesting sector today, because effectively the 3% prime yield is pretty much prime retail, prime offices, and prime residential. And effectively, historically, residential is much lower yield, so actually it's relatively more interesting, and I think you will get growth in residential capital values. So I think it's interesting, but obviously the issue is on the management aspects of that, and the legal constraints that you have on residential. So I'd say that the main opportunity is development.
And in terms of the kind of requirements for social housing, I think there's going to be a change in that potentially. Does that make the sector more attractive generally, do you think, or will it have little impact?
Yeah, I mean, there's not the social housing requirements that are changing. It's more the fact that you if you're transforming an office building, you will be able to build more residential, which allows you, which sort of compensates for the fact that you also have to build 30% social housing. That's within Paris, and then when you go outside of Paris, the rules are slightly different, and it is easier to do.
So there's more flexibility outside of Paris than there is actually in Paris. So that may be a story potentially for some of the larger regional cities.
Yeah, I think it's certainly a lot easier in the regional cities, and even within some of the communes that neighbouring Paris, you have a quota which is applicable to the whole commune, not to every project. So if the commune has achieved its quota, you can develop more residential. So you have to go town by town, really.
Okay, good. The most popular question, I can tell you, is, so there must be a perception of this, which is how can international investors compete in a French market dominated by domestic capital? So, Oliver, Steve, you both are. So, how much is domestic capital an issue? And also for anybody who wants to pick that up, is that a challenge for the international investors that actually local capital is very strong? Or do you see yourself now, having been there for so long, as local capital, Steve? I don't know.
Yeah, I think that we certainly have been there. We have an office there for 22 years, so I think that we consider ourselves reasonably local for a foreign investor. But I mean, there's a lot of capital generally. It's not just local capital, though effectively the French investors have perhaps been a bit more dominant the last few years. But I don't see that it's a particular issue. I think that the French market's very open. It's high liquidity, highly transparent. Effectively, we work in several markets, and we find working in France generally as being the market's very well organised and relatively easy to do business.
Yeah, I would certainly agree with that. If you look at the Paris market, it's a very, very deep market. It's a very diverse market. It's a very international market. I think it is very important to have a local team. It's very important to have local knowledge. But if you have that in place, then I think it's no disadvantage to be a foreign investor or to be perceived as a foreign investor, because technically you are not really. So yeah, I would agree with that. Transparent market, highly liquid, and if you see where, for example, the Paris market has come, I think it is less domestic than it used to be.
In terms of the regions, which cities do you think are most likely to outperform? So let's take Paris out of the discussion for the moment. In terms of the regional cities, where do you think, in terms of locations, the best opportunities are?
Okay, I'll give it a go. Maybe because I have more of a research background. What I quite like is sort of the west coast and the southern parts of France, where in terms of the population growth forecast and the employment growth forecast, there is significant growth. I'm not a big fan of Marseille, but for example, I like Bordeaux, I like Toulouse, I like even smaller cities like Rennes, because you have a highly educated workforce, you have a diverse economy. It has all the ingredients that you would have with what's often called a winning city, because it's a strong local economy, and in terms of the macro prospects, it actually is looking quite favorable. So yeah, selected cities in the west and in the south of France.
Okay, Arnaud, what's your view? And also, just in terms of picking up a question that we had, in terms of the Grand Paris project, is that actually going to create more of an issue for the regional cities, because they'll be even smaller than they were before compared to Paris?
I will start with the second questions. In fact, the Greater Paris, what we are witnessing is some people are leaving Paris, especially to live in Bordeaux, and the residential prices in Bordeaux has increased a lot due to that, because the connection with Paris has been reduced to close to 2 hours by train when there's no strike. And speaking about strike, we are putting with the Grand Paris Metro new lines 200 kilometers of automatic metro. The inner Paris Metro network right now is 200 kilometers. So we are moving forward. So to answer the question, I won't think that the impact of the Grand Paris project will be negative for other sub-markets in France. Because the question is, we are centralized countries, and if there are a good link between the regional cities in Paris and Paris, that won't be a problem. And for the first question about the market, I come from Aix-en-Provence in the south of France, close to Marseille, so I'm not really objective about Marseille. Marseille is a tough market, but like in Lyon, for example, you have different kind of office market now in Marseille, meaning that you have some office stock. We can speak about traditional business district now in Marseille. Euro-Méditerranée has been a long development, but it's true that it's less stable than what we see in Lyon, for example. I do agree with Bordeaux. In fact, in the Macron development of the politique of François Hollande, for example, the French universities can decide to take their independence from the French government. We are advising the University of Bordeaux right now on their piece of lands, on their buildings, and to create more or less a French REIT, being able to have revenue from real estate to finance the university. So in Bordeaux, we will have a lot of opportunities of land redevelopment with new lands. But also in Lille, for example, we all know the train stations, but the economic are pretty good in Lille, even if the workforce, as you mentioned, may be more skilled in the west part of France.
Okay, good. I had one quick question come in as well, which is about livability, sustainability, those kinds of things. How much is that impacting on, maybe for you, Steve, how much of those kinds of softer factors are impacting on your investment strategy?
Well, for what we're doing, I think that's quite key to what we're trying to do by transforming buildings. So we're taking basically obsolete buildings and trying to create modern grade A space wherever we can. So I think it's fairly key to our strategy. Yeah.
Okay, good. Yeah.
And if I may add, I mean, if you look at the legislation across Europe, I'd probably say that France is the most advanced when it comes to sustainability legislation in terms of legal requirements. So you can't ignore it. I mean, it's key anyway, because we all want to leave the planet for our children. But it is just key because you cannot take it away. It's just inbuilt in the law, and you cannot get away from it. It's absolutely key.
It's key also for the corporates. So when you speak about occupiers, I'm going to do the broker. I'm sorry about that, but large office space take up in Paris-Île-de-France is roughly around 1 million square meter each year, more or less, between 800 and 1.2 or 1.3 million each year, and they go for 80% on new space or heavy refurbished with a lot of they look really at the environmental friendly office spaces. So that's where the obsolescence of the park is also good for us. And as the vacancy rate is really low, we have 3.2 million square meters of office space immediately available in Paris-Île-de-France right now, on the stock of 54 million square meters. And among those 3.2 million square meters, only 500,000 square meters are new. And if you look at what is going to come on the market, we have 1.5 million square meters of new office space that are certain, with building permit granted. 1.5 million plus 500,000 square meters is 2 million square meters of new office space coming to the market. Is more or less a year and a half or 2 years of large office space take-up in Paris. So the need for quality, the search of quality is like key for corporates, is impacting the investor on the product that you're going to put on the market. So because we have, let's say, a tense market and a low vacancy rate, there's no risk to say that the search for quality will stop in the few years it won't.
Okay, good. So that's yes.
Yeah, just to add on to that point and to respond to the result here, 55% in Grand Paris. If you're actually an owner of space in Paris and you own a building, you need to really look at that market and whether you arbitrage out of that asset, the effect that the Grand Paris and the Olympics will have. What could be a very sort of core or a building in a good secondary location could all of a sudden become a non-core or it could become a bad secondary location in the next 5 to 10 years. So you're buying into an asset or you want to finance an asset with a good long lease and so on. At the end of your investment period, you could find yourself in a very different sub-market that's changed definition because of what's happening in the Grand Paris and the Olympic impact. So be careful what you buy into. And then I'll pitch. If you need advice, obviously, or you need an operating partner or a joint venture partner, or you need tax advice and of course structuring and need finance, then we've got the panel here for everyone to make sure you know what you're doing. The reason I'm mentioning that, I wouldn't suggest coming back to the regions. If regions are interesting, as all other sites, but to go into the regions for the first time, your first investment, I think you need to work with someone like Thierry at CMS to understand how you do business in France first. Paris is obviously the great place to do it. Colliers and the rest of us here will be able to advise you in that. But I wouldn't make a focus on the regions without having first bought in Paris and testing the metal and testing the market and understanding how to do deals in France first before you venture out in the regions. It's unlike Germany. It's very centralized. Get your act together, understand the values, understand how to get things done first, and structure it all well. And again, we've got a great panel here to help everyone and advise and make sure that people don't make mistakes entering the French market.
Okay, good. Grand Paris and the Olympics, everybody believes that's going to have the most positive effect. I like the fact that one person in the room obviously knows Japanese capital is coming, so we need to speak to them afterwards, because I've been waiting for that for a long time now. This year? Definitely? Okay. Well, we'll see whether or not that moves up next time, which will be interesting. Just very briefly, just is everybody right? Is Grand Paris and the Olympics going to have a really significant impact? And whilst the panel are just asking that, that's your final one, which is which sector will outperform over the next 5 years. So vote on that and we'll just check whether or not that's correct. So Grand Paris, what's your sense of that?
Yeah, I think it is a game changer for Paris, and as Blair explained, how it's changing, how it has the potential to really open up sub-markets, how it's going to change sort of the way employees travel around, where sort of offices can be based. I think it is a game changer. Now, I think unfortunately some of it is already delayed. I think line 15 is going to be 2 years later, but a project of that size, that's almost a given. And the Olympics, I share if you go to Saint-Denis at the moment, it's not the nicest part of town in Paris. But I think, the Grand Paris and the Olympics with all the stuff that's happening in that area. And if you look at the map again, that Blair had up as well, you can see all the lines basically going. I mean, Saint-Denis will become a transport hub. That could really transform that. So the Olympics will have in my opinion, will have a transforming effect on that part of the city.
I won't say that all the new 68 metro stations will be a good investment. The idea will be to think about Paris and the first ring coming together and becoming more a regional market than a local market for some cities close by Paris right now. So you have to work and pick up the right cities who are going to be, joined within the Paris office market. And then for the cities in the second ring out of Paris, the idea if they can become local hub for office, that's a good point, and they can develop residentials more easily because the link between first, second cities around Paris will be done with the Grand Metro network, and some of those cities will be also connected to inner Paris. So for those residential development, it will be also of interest. So definitely the impact is good. And Olympic Games will be definitely for Stanley. I'm just going to take a quick example. Tour Pleyel has been, a skyscraper with a lot of asbestos for years. It took more than 10 years to redevelop it. It's under development with a big hotel, 700 keys, maybe too much, but no matter what, everybody's looking at this potential investment right now. It comes out because of the Grand Paris and the Olympic Games. So north of Paris will be really benefit from the Olympic Games.
Okay, good. Last question from me as well is, in terms of your sort of top investment picks, ideas, if people are looking to invest in France, where should they look? You can either judge it from your own personal view or from your corporate view, depending on how you like. Let's start with you, Serge. Where are the best opportunities that you think? Let's say over the next 5 years. Let's give it a 5-year window.
No, I think we've talked a lot about the Grand Paris, and obviously, as you mentioned, it might be a game changer. And I think the most important aspect, and what we will look at as a bank, is the location and the connectivity. And if those aspects are ticked, I guess you can make a good investment for the next 5 years in those areas. Maybe just coming back to because I touched the point on core versus value add and development, where banks today are, I guess, present around the spectrum. For regions, because I haven't touched on that, I think it's interesting to see that we have seen, for example, in Lyon or in Bordeaux. Bordeaux, we talked a lot about Bordeaux, but just to mention, there has been an investment and with a lot of competition on the bank side also for this type of cities. So just to mention that there is really also for regions, banks are willing to follow investors when the projects are well located and have good fundamentals.
Okay, great. Thank you. Oliver.
Value add Paris offices and logistics development in the main sort of logistics corridor. So southern Paris and then stretching all the way down to Marseille. I think that's where you'll probably see the most excitement.
Okay, very good.
Yeah, the Greater Paris and logistic. I think that's where you should look at when you come to France. And be one of the first investor on the newer Greater Paris is key to get into this market, and that's a good opportunity to enter a 15 million square meters office market.
So this is the advice of the tax man. I think that I would invest in hotel business in Paris because I think that we can create value in Paris, and there's still a high demand in hotel. And I would also invest in residential in Paris also.
I would agree. Obviously, we've talked about value-add offices, which is what we're trying to do, which we think is interesting. But I would also add, I think residential is clearly worth looking at. I think residential values in Paris, whilst they're high, they've effectively stagnated a little bit since really after the financial crisis until about a couple of years ago, and really fallen behind other capitals like London, German cities, Stockholm, where the pricing has gone much higher. So I think residential is interesting as well.
Great, very good. Thank you very much.